how does our listener know if this type of financing is right for them?
Okay, let's paint a picture of the ideal candidate.
Okay, the ideal candidate.
First and foremost,
Yeah.
they're selling physical goods, not services.
Okay, physical goods.
Think manufacturers,
Yeah.
wholesalers, distributors.
Right.
They're one creating tangible product
Intangible product.
that can be shipped and sold.
So if I'm a consultant or a software developer,
Yeah.
this is probably not the path for me.
Exactly.
Yeah.
It's all about those tangible goods.
Intangible goods, got it.
And ideally, this candidate is experiencing rapid growth
Rapid growth?
or operates in an industry with seasonal demand.
Okay, so they're facing a surge in orders,
Right.
but their current cash flow can't quite keep up.
Exactly.
Got it.
Purchase order financing provides that boost they need to handle those growth spurts or seasonal peaks without having to take on traditional debt.
Okay, that makes sense.
Yeah,
And of course,
Yep.
they have healthy profit margins.
that's key.
Right, because those fees can really eat into those margins.
They can. Yeah.
So we're talking maybe 20% profit margins or higher?
Yeah, that's a good rule of thumb.
Okay.
Of course, it varies depending on the specifics of the deal.
Of course, yeah.
Okay, so tangible goods, rapid growth, healthy profit margins.
What else?
Their customer base
Okay. Customer base.
is largely B2B or B2G.
Business to business
Ah.
or business to government.
Yeah,
Because those types of customers typically have longer payment terms, right?
exactly.
Okay, so that makes purchase order financing a good fit.
Yeah, it can bridge that gap and keep cash flowing, even if you're waiting 60 or 90 days for payment.
Okay, so our ideal candidate is selling tangible goods to other businesses or government agencies.
Yeah.
They're growing quickly.
Uh-huh.
They have healthy profit margins.
Right.
And they're comfortable with those longer payment terms.
Exactly.
Well, check.
They also have strong relationships with their suppliers.
Ah, the suppliers.
This is crucial
Okay.
because it ensures a smooth and reliable fulfillment process.
I bet suppliers are more willing to go the extra mile
They are.
for businesses that pay their invoices on time.
You got it.
Yeah.
It's all about building that mutual trust and respect.
Trust and respect. I like it.
And finally, our ideal candidate might be a startup or a newer business
Okay. A startup.
that's still building their credit history.
Because purchase order financing doesn't rely as heavily on your own business credit, right?
Exactly.
Okay.
It's primarily based on your customer's creditworthiness.
So it can be a valuable alternative to traditional lending for those early stage companies.
Precisely.
Okay, so we've got selling tangible goods,
Mm-hmm.
experiencing rapid growth,
Yes.
dealing with seasonal demand,
Right.
having healthy profit margins,
Uh-huh.
working with B2B or B2G customers,
Yes.
having strong supplier relationships,
Right.
and potentially needing an alternative to traditional credit.
That's it.
If that sounds like you.
Yeah,
Purchase order financing might be right up your alley.
it might be.
But even if you check all those boxes,
Okay.
it's important to understand that there are different types of purchase order financing available.
There are.
Okay.
It's not a one-size-fits-all solution.
Okay, so there are different flavors.
There are.
All right, I'm ready for a deep dive into the options.
You bet.
Okay.
The most common type is full purchase order financing.
Full purchase order financing.
This is where the financing company covers 100% of the purchase order amount.
So I get all the funding I need
You do.
to fulfill the order.
Without having to dip into your own pocket.
Okay, no money out of my own pocket.
Yeah. This is great for businesses that need comprehensive support or those with limited cash flow.
Okay.
But if you only need a portion of the funding covered,
There's caution, right?
there's partial purchase order financing.
Partial, okay.
Maybe you can cover 40% of the costs yourself,
Okay, 40% me.
and the lender provides the remaining 60%.
Okay.
This can be a way to secure better terms or lower fees,
Okay, because I'm sharing some of the risk.
since you're sharing some of the risk.
Yes, makes sense.
So full financing or partial financing.
Got it.
What other flavors are out there?
Lay it on me.
Some lenders offer purchase order financing with inventory.
With inventory.
It's a hybrid model that helps you manage your inventory levels,
Okay.
in addition to covering the cost of goods for a specific order.
So it's like a 2-for-1 deal.
Exactly.
Okay, I like it.
It can be especially useful for businesses with seasonal products or those operating in industries with fluctuating demand.
Okay.
Then there's reverse purchase order financing,
Reverse, okay.
which flips the script a bit.
Okay, how so?
Instead of the buyer seeking financing,
Yeah.
it's the supplier who gets the funding.
Oh, interesting.
The financing company pays the supplier directly,
Okay.
allowing them to fulfill the order without having to wait for payment from the buyer.
So it's about supporting the supplier's cash flow and
Yeah.
making sure they have the resources to complete the order.
Exactly.
Interesting.
And if you're involved in international trade,
International trade.
you might come across international purchase order financing.
Okay, international.
This is specifically designed to navigate the complexities of cross-border transactions,
Cross-border. Okay.
things like currency exchange rates and customs duties.
So it's like a specialized version of purchase order financing.
Exactly.
Tailored to the global marketplace.
Precisely.
Yes.
Then you have contract financing,
Contract financing.
which is similar to purchase order financing,
Okay.
but it's geared towards service-based businesses
Okay. Service-based.
rather than those selling physical goods.
So instead of financing a purchase order for a shipment of widgets,
Right.
I'm financing a contract for consulting services or website development.
Uh-huh.
Okay, so it's a different type of contract.
To the contract, yeah.
Got it.
And finally, some lenders offer a combination of purchase order financing with invoice factoring.
Oh, wow. A combination.
So you're covering the upfront costs of the order
Okay, upfront costs.
and getting help managing your cash flow once those goods are delivered.
Oh, so I get help with both.
It's a more comprehensive approach
Okay, comprehensive. I like it.
that can simplify your financial operations.
Wow, there are so many options.
There are.
It seems like there's a type of purchase order financing out there for almost every scenario.
Yeah, there probably is.
But before our listener gets lost in this sea of choices, let's break down the nitty-gritty details of the financing terms and rates.
You're right, those details are crucial.
They are.
Let's start with loan terms.
Loan term.
Purchase order financing is generally short-term,
Short term.
designed to align with your order fulfillment timeline.
Okay.
So we're not talking about a 5-year loan here.
No 5-year loans.
Not at all.
Yeah.
Most agreements
Yeah.
last between 30 and 90 days.
Okay, so just a few months?
Though some might extend up to 120 days for larger, more complex orders.
Okay, so it's a relatively quick turnaround.
It is.
What about interest rates?
Interest rates.
How do they compare to traditional loans?
They tend to be higher,
Higher? Okay.
primarily because of the increased risk
Okay. Increased risk?
and the short-term nature of the financing.
Okay, makes sense.
Yeah.
And we talked about those fees earlier.
We did.
Right, those can add up.
Yeah. Most lenders
Okay.
structure their rates as a percentage of the purchase order value,
Okay, percentage of the order.
anywhere from 1.5% to 6% per month.
So the cost can vary quite a bit,
It can.
depending on the lender, the size of the order, and the risks involved.
Precisely.
So it's really important to shop around.
It is.
Compare those offers
Yeah.
and make sure I'm getting the best possible deal.
Absolutely.
Okay, so we've covered the basics of purchase order financing,
Yeah.
the different types available, the terms and the rates.
Yeah.
But now let's talk about the elephant in the room,
Okay. The elephant.
getting approved.
Ah, yes.
What hurdles does our listener need to clear
Okay.
to secure this type of financing?
The eligibility requirements
Yeah.
can vary quite a bit from lender to lender,
Okay.
but there are some common factors they all consider.
Like what?
First and foremost,
Okay.
they want to know about your business type
Business type.
and industry.
Okay.
Because, as we discussed earlier,
Yeah.
this type of financing is primarily for businesses selling tangible goods.
Right. Physical product.
Exactly.
Right.
Lenders want to see that there's a physical product involved,
Okay.
something they can track,
Okay.
and ultimately liquidate if things go south.
So if our listener is selling software or providing consulting services,
Yeah,
this probably isn't the right fit.
it's not.
Okay.
They need to be in the business of producing or distributing physical products.
Okay. So like electronics, clothing, furniture.
Exactly.
Got it.
Makes sense.
What else are lenders going to be looking at?
They'll definitely want to know about the size of your orders.
Okay. The size of my orders.
Most purchase order financing companies
Yeah.
have minimum order size requirements.
Okay. So I can't just finance a $5,000 order.
Probably not.
Okay.
They need to make sure the deal is worth their time and effort.
Makes sense.
Yeah. The minimum order size can vary,
Okay.
but it's usually somewhere between $50,000 and $100,000.
Okay. So I need to be dealing with fairly substantial orders
You do
to even be in the running.
Yeah.
Okay. What else matters?
Credit scores
Credit scores.
are always a factor.
Okay.
They'll look at both your business credit score
Okay. Business credit.
and your personal credit score.
Personal credit as well. But I imagine the requirements aren't as strict as they would be for a traditional bank loan.
You're right.
Okay.
There's more flexibility here.
Okay.
While a good credit score can definitely help you secure better terms.
Makes sense.
It's not always a deal breaker.
So even if I've had some bumps in the road credit-wise,
Yeah.
I shouldn't automatically rule out purchase order financing.
Exactly.
Okay.
It's worth shopping around.
Okay.
Talking to a few lenders and seeing what their specific requirements are.
So it's all about finding the right lender.
It is.
Who understands my situation.
Yeah.
And is willing to work with me.
Precisely.
Okay, so we've got business type, industry, order, size, credit score?
Yes.
Yeah.
What else?
Time in business.
Okay, how long have you been in business?
Is another important factor.
Okay.
Most lenders prefer to work with businesses that have been operating for at least 6 months to a year.
So startups might face a bit more of an uphill battle.
It can be a bit more challenging.
But not impossible.
Okay.
Some lenders specialize in working with startups.
Okay.
And are more willing to take on that added risk.
So again, it's all about finding the right lender.
It is.
Who understands my situation.
Precisely.
Now let's talk about something that's often overlooked, but incredibly important.
What's that?
Your business history and future projections.
Yeah, your track record and your vision for the future.
So they're not just looking at the present.
No.
They're looking at my past performance.
Yes.
And my future potential.
Exactly.
Okay, so what kind of information are they looking for?
They'll want to see financial statements from the past few years.
Okay, financial statements.
Details about previous purchase orders and how you fulfilled them.
Okay, track record.
Customer testimonials.
Testimonial.
Or references.
Okay.
And any industry recognition you've received.
So it's all about showcasing my credibility.
It is.
And building trust.
You got it.
And for newer businesses.
Yep.
That might not have years of financial statements to share.
Right.
It's important to highlight any relevant experience you or your team have in the industry.
Absolutely.
So even if my current business is new, I can still demonstrate my expertise.
You can.
And my knowledge of the market.
Exactly.
And just as important as past performance are my future projections.
They are crucial.
Okay.
Lenders want to see that you have a clear vision for growth.
Okay, a vision.
And that you've thought through how you'll handle larger orders and expansion.
So they'll be looking for things like sales forecasts, market analysis, cash flow projections, and my plans for acquiring new customers.
You're right on the money. It's not just about crunching the numbers from the past.
Right.
It's also about painting a compelling picture of the future.
Okay, so tell a good story.
Yeah.
And a well-crafted business plan can really tie all of this together.
Absolutely. A solid business plan demonstrates to lenders that you've thought through every aspect of your business.
Okay.
And that you're prepared to handle the challenges that come with growth.
So it's not just a formality.
No.
It's a strategic document.
It is.
That can really make a difference in securing funding.
Precisely.
Now let's shift gears and talk about the application process itself.
Okay. The application.
I know. Gathering all that documentation and presenting my business in the best possible light can feel overwhelming.
Can be.
Any advice for our listener on how to prepare for this process?
I do.
Okay.
And increase their chances of getting approved.
Let's make this as painless as possible.
Well, the first thing I would say is start early.
Start early.
Don't wait until the last minute to start pulling everything together.
Right, because scrambling to find missing documents or rushing through my business plan, that's never a good look.
Exactly. It sends the message that you're disorganized and maybe not as serious about the opportunity as you should be.
Got it. So start early and be organized.
Yes.
So start gathering those financial statements, tax returns, my business plan, customer information, supplier details.
Right.
Everything the lender might ask for.
You got it.
Okay.
And once you have all those documents in order,
your documents are organized,
take the time to really polish your business plan.
Okay, polish the business plan.
This is your chance to tell your story.
Okay, my story.
Highlight your strengths and explain why you're the perfect candidate for purchase order financing.
I love that.
Yeah.
It's not just about the numbers.
No.
It's about the passion, the vision, the why behind my business.
Exactly.
Yeah.
Lenders are more likely to invest in businesses they believe in.
That makes sense.
So make it personal.
Okay, get personal.
Share your story.
Yeah.
And let your enthusiasm shine through.
Okay, good advice.
So we've got a well-organized application, organized, polished business plan.
Polished plan.
And a compelling story to tell.
Compelling story.
Anything else our listener can do to increase their chances of getting approved?
What else can I do?
Well, while purchase order financing isn't as credit-driven as traditional loans, it's still a good idea to check your credit reports before applying.
Okay, check my credit.
Make sure there are no errors or discrepancies.
Okay, no error.
That could raise red flags.
So tidy up my credit profile.
Exactly.
Address any issues proactively.
Yes, and be prepared to discuss those issues honestly and openly with the lender.
Okay, be honest.
They understand that businesses face challenges.
Right? Everyone has challenges.
It's all about demonstrating that you're taking steps to address those challenges and improve your financial health.
Got it. Okay. So be upfront and honest.
Yeah.
Okay, so we've talked about preparation, organization,
Yes.
credit checks,
Right.
and storytelling.
Okay.
Any other tips for crafting a winning application?
Make sure you provide detailed information about each purchase order
Okay. Purchase order details?
you're looking to finance.
Right.
Lenders want to see clear documentation of the order.
Okay.
Documentation,
Sure.
customers' credit standing,
Customer's credit.
and your plan for fulfilling the order.
Okay, so paint a clear picture of the whole process.
Precisely.
Okay.
And don't be afraid to address potential risks head on.
Okay.
Identify any challenges
Yeah.
that might arise in fulfilling the order
Okay.
and outline your contingency plans.
So I'm showing the lender that I'm thinking strategically.
Yes.
I'm anticipating problems, and I have solutions ready to go.
You got it.
I like it.
Being transparent and proactive can really build trust with lenders.
Makes sense.